Just have a chart open here of General Electric, which announces earnings before the market opens tomorrow morning on the 20th of October. I have a long-term chart up here going back to 2008. And as we basically can see, we have pretty strong support here at the 22 level. So earnings definitely has the potential to form a bottom in this stock. As we can see, the stock has been on the decline all year, mainly because its earnings projections for the year were just way out. It has no hope of achieving its guidance that it recently had printed for the year. And recently there's been a big change up in management. There's a new person now on the board, which is being backed by a group which has a 1% stake in the business. So definitely short term, you can see and probably will see cutbacks taking place and a lot of trimming going on around the costs and manufacturing operations of the company. There's also rumors that the company is going to combine some units again to try and find synergies, try and reduce costs. But, technically, the stock has been in a staircase down all year, and it hasn't been encouraging, because if we go back prior to 2008, the stock was trading at much higher prices, and this stock has been a favorite with dividend investors over the past few decades because it has paid a reliable dividend and has treated shareholders generally well. But there's a lot of people invested in this stock prior to the financial crisis of 2008 that are still way above water on their holdings and are just waiting for this stock to come back, and have not been encouraged by the down move we have seen throughout 2017. Where are we at the moment? Well, there's rumors that the dividend could get cut, the dividend now, because of the decline in the stock price all year has reached well over 4%. And I don't see the dividend getting cut. The last time the dividend got cut was back here in 2009, when that was the first time it was cut in 71 years. At that time, the company had the good fortune that the dividend cut took place at the exact time that equity markets bottomed. As you can see here, GE collapsed in 2009, but quickly rebounded along with the rest of the equity markets in the US once quantitative easing and money printing basically rose all markets, so to speak. So we're at different conditions this time for GE. US equity markets are at all-time highs. GE has been trading inversely to these markets. So even if we did get a dividend cut, I do not see a top in US equity markets for the time being. So again, it's going to be aided by the tailwind of rising markets that we have at present. This stock I have followed for the best part of 18 months, and its technicals just haven't matched the company's fundamentals. I do think the company made the right decision with divesting of its financial arm, GE Money, because it's gone back to its industrial roots. It's gone back to what it knows. Yes, there has been a few acquisitions like Alstom and the most recent one in the oil and gas that we haven't seen synergies yet, and we haven't seen the earnings and cash flows like basically we were expecting. But I still think it's a bit early. The price of oil continues to go up. That will help its depressed oil and gas division. I do see crude oil breaking out above its 2016 highs in this particular intermediate cycle. And, as I've said, the fundamentals of this company are not lining up with the technicals. Like, the company still brought in 40 billion in gross profit last year, 10 billion in net income. It's at the top of many sectors that it's involved in, basically because of its competitive advantages it has, such as its huge installed base of equipment all over the world. Customers are very reluctant to leave many times because there are significant switching costs involved. So I do think sooner or later we're going to see a turn here, basically based on the size of this business. Value investors will always come in if a stock drops too much. This stock now is trading with very low earnings multiples compared to its historic averages. And if we look at the sentiment numbers here, we can see that we dropped here to 23.43 on the 9th of October when sentiment dropped to just 8. Okay, so this, as you can see, this was the lowest point all year. Now, I do acknowledge that low, depressed sentiment numbers did not force a bottom in the stock over the past 12 months. But, you can be sure that there will be technical traders looking for a bottom here. Earnings may cause it. It'll be interesting to see if dividend will get cut because of the new management shakeup and because of the new focus around cost cutting. I don't think so. I think the dividend will stay. The dividend has been consistently reiterated by management as being a top priority. We're going to find out that tomorrow morning whether it gets cut or not. But besides the dividend issue, you're looking at a stock here trading around $23 a share. It's a far more appealing prospect now than probably any time over the past few years. So the risk reward setup, is definitely favorable. One could easily place a stop loss below or even at the $22 level. We do seem to have a lot of support at this level. And again, I would be looking to scale into a long position here in the near term.